Hi friends, Simid here from informedtrades.com. In this video I want to outline the case for a coming mania in the gold market. We've sort of touched on a lot of these themes on Informed Trades before. I just wanted to put it together in a nice short video to crystallize the argument for why there may be more room left in the gold market and why even a mania could emerge. Key points: gold is an alternate form of money. It's scarce, portable, divisible, recognizable, durable, and has no industrial purpose. Those attributes are sort of what makes it a good form of money, what makes it difficult to counterfeit, what makes a good store of value, and not having any other industrial purpose ensures that its entire purposes can be for monetary usage, for savings and for wealth, so it won't be affected by some other industrial factor. The price of gold historically has tended to risen when monetary systems break down. This is for a pattern that's been going on for thousands of years now, and it's a very small market with declining new production. So if a big amount of demand steps in, or even a small amount of demand steps in, it can really set the price off because there's not much of a supply, and signs are that the supply it will decline. Okay, banking systems breaking down. On the screen right now, you see the number of bank failures in the U.S. From 2003 to 2007, not too many. Ever since the financial crisis of 2008 to 2012, the number of bank failures has exploded. So this can cause a loss of faith in the current monetary and banking system. Interest rates are negative or negative real interest rates in many parts of the world. What that means is that the money you get for having cash in the bank is less than the rise in inflation rate, or the cost of living is rising more than having money just sitting in your bank. So the money sitting in your bank is losing purchasing power. That's when money starts to look for alternate stores of wealth, such as gold. Global debt levels are unsustainable. Debt as a percentage of GDP for a lot of the large economies in the world today. The higher the debt levels go relative to the strength of the economy, the more likely that economy is going to need to print money. When that happens, once again, that puts the ability of the paper currency as to store value into question, and that leads for demand for alternate forms of money like gold. Central banks have been aggressively accumulating gold. On the screen right now is a chart from Casey Research. Shows the central banks have been increasing their amount of gold that they've been buying since 2008, since the financial crisis really began. That's creating a lot of demand. That's really driving the way higher. You could view it as the smart money that's sort of pushing the price higher. It also introduces the question of why are they doing this? Why are the people who print money buying gold? Are they planning some type of a reintroduction of gold into the monetary system, or are they open to that possibility? That's one interpretation. Production from new mines will likely decline. So in addition to all the the demand factors that we outlined thus far in this video, there's the issue that production from new mines is likely to decline this year. 2012 could be sort of the peak, as the chart on the screen illustrates. A very small market. There's a bunch of examples of this, but basically 1% of the U.S. M1 money supply is 13 times the amount of all the gold coins purchased last year. So it really doesn't take much for the money supply to move out of cash into gold. That could create a big move. Exhibit B. The value of all exchange traded gold instruments is 2.1% the amount of the S&P 500 corporation's liquid assets. So if those big corporations decide to move some of their cash into gold, again, that could really, significantly increase the value of the gold market. The TSX Venture Exchange is where junior gold mining stocks get their start. These are largely exploration stocks, very small companies, sort of like startups. The value of that entire exchange is about $43.5 billion. The value of Apple, the world's most valuable corporation, is $565 billion. So really, that illustrates just how small the gold startup market is. It's not going to take much to set that off. That's sort of the basic argument. If you have more to share, questions, join us over at informedtrades.com. Thanks and best of luck in your trading.